All right, kia ora team, if you could take your seats, that would be great, and we'll get underway. Awesome. Cool. So welcome to our Strategy Operations and Finance Committee meeting of the 14th of September to elected members, councillors and community board members, mana whenua partners, staff and those who may well be tuning in online, and also to our external presenters who are on Zoom. Will be with you shortly. So I'll pass over to Kim for our council blessing.
Kia ora tātou, tātou hui mai nei I tēnei ata. Nei mai haere mai, me tīmata, me karakia tātou. I a mātou e whiriwhiri ana I ngā taki kei mua I o mātou aro, e pono ana mātou ka kaha tonu ki te whakapau mahara hua pai mō ngā hāpuri e mahi nei mātou. Me kaha hoki mātou katoa kia whaihua, kia tō tika, tā mātou mahi, mā te maia, te tiro whakamua, me te hihiri ka taia te arahi I roto I te kotahitanga me te aroha. Kia ora.
Kia ora, Kim. Thank you for that. Just a reminder to the table that we only have 2 hours scheduled for this meeting, as we have a pretty jam-packed day. So if we can be really intentional about staying on track with both our questioning and also our debate contributions, that would be much appreciated. And I will be kind of quite hard-lined on that just because we are sticking to such a tight time frame. And we'll aim to take a break after the Vision Kāpiti and Design of the Outcomes framework paper, and then come back for climate change and resilience strategy and the stand-up of the think tank. So just so everyone's got that in mind as well. On to item number 3, apologies. I've received apologies from Councillor Kofod, Councillor Cooper and also Andre Baker from Te Atiaoki Whakarongotai. I'll move those apologies. Is there someone who can second those? Mayor Holborough, all those in favour? Aye. Against? That's carried. Item number 4, declarations of interest relating to items on our agenda. I haven't been made aware of any. Item number 5, public speaking time for items relating to the agenda. Have also not been made aware of any public speakers this morning. Item number 6, members' business, leave of absence. Again, you can make the Mayor's office aware of any leave of absences that you may require. In matters of an urgent nature, I also haven't been made aware of any. Item number 7, updates, there are none, and so that takes us through to reports, and we move to item 8.1 on page 6, Local Government Funding Agency Statement of Intent 23 through 26, and annual report from our GFA 22-23. So, Jing, do you want to come up to the table, and anyone else, any other staff members who are seeking to present this? Oh, we're trying to be efficient today. I'm just spitting bars. Kia ora, welcome, Jing. Over to you.
Thank you, Madam Chair. So I'll just take the report as read, and we've got Mark and Andrew from LGFA online, and they've got a presentation for us. So let's go through that. Thanks, Mark and Andrew.
Look, thank you, and Madam Chair and councillors. Look, we do appreciate you got a very busy agenda, so we'll be very quick here. My name's Mark Butcher. I'm the Chief Executive of LGFA, and Andrew Meikle heads up our relationships with our councils and does all the credit work at LGFA as well too. So both of us should be fairly familiar, I think, with you. We've certainly had a long relationship with the council going back to when we first were established in 2012. So we presented a number of times. But look, what we'll do today, we've got a very quick presentation and happy to take questions at the end. And I'll pass across to Andrew now, who will basically go through the presentation. But just before that, just confirming that you can see on screen the presentation.
Yes, we can see the presentation. Thank you.
Okay, good morning, everyone. Just on page 2. Just to highlight some of the recent developments at LGFA, and this covers things that are in our 12 monthly results to June 23. The big thing has been the record amount of council lending. So in the in the 12 months to June 23, we lent $3.99 billion to councils. That's a record, and a record by quite a bit. So even in the last 2 years, that's 40% higher than what we were doing previously. And that is probably the single biggest purpose of LGFA, is to provide certainty in lending to councils. The other thing, we now have 77 council members. The only council we don't have is Chatham Islands, which is very small, only 700 people. And we now have 4 CCOs that have joined, and a number of CCOs that are in the pipeline. So we expect another 2 or 3 CCOs to join in the next financial year. So that was a change a couple of years ago, where we changed the rules to allow lending to CCOs where they're sort of guaranteed by councils. And the other area is new product initiatives. So as I mentioned, CCO lending, we've introduced standby facilities to councils, so that's now up to nearly $750 million. And also the sustainable lending products as well. And we'll touch on that at the end, as Kāpiti has sort of now joined in terms of their climate action loan. So next page. I won't spend too much time on the annual reports and CCOs, but it's perhaps best to take your questions so we can sort of drill down into the areas that are of most interest to you. The one thing to highlight, and the only objective that we didn't meet, was the operating profit. So you can see there in that top box, the annual result to June 23 was a lot lower than what it's been in the previous years. That wasn't a surprise to us, and that was sort of forecast in our SOI that it was going to be lower than previous years. The big thing is that what is sort of costing us is that LGFA is borrowing for a longer term than what it's lending for. And because longer term borrowing costs more than shorter term borrowing, that comes at a financial cost. The other thing which we've seen is councils borrowing a lot shorter than what they have previously, and a lot for just 2-3 years, and that's because of the uncertainty over the water reforms and the timing on that. So previously councils might have been borrowing for 7 to 10 years. Now they're borrowing for 2 to 3 years because they don't know when they might get repaid their water debt. The other thing, because of the record amount of borrowing, we've been maintaining a lot higher level of liquidity. So when we sit on a lot of cash and short-term assets, we have to sort of borrow longer to finance that. So that sort of comes at a cost. But as mentioned, our priority is to provide certainty to lending, and so therefore we've been running a lot bigger liquidity portfolio. So next page. So again, I've touched on the only objective that we didn't meet is the one on this page, and that is in your council sort of agenda, that we didn't meet the operating profit for the year. So next page. The other one, just to sort of highlight, is the satisfaction rate from councils. So in our annual report, we put in the results from the August 22 survey, which we had 100% satisfaction rate. And we've just recently got the 2023 results. So again, we've got around 96% satisfaction rate from member councils. So that's very pleasing to us, that councils think we're adding value in terms of their borrowing requirements. And the other thing was had a 100% satisfaction rate in terms of LGFA staff. So if we flick forward to page 11, I won't go over all the SOI performance targets because they haven't changed since the draft statement of intent, which the council has already reviewed, but happy to answer any questions on those. Probably the one big change has been the increased focus on sustainability and helping the sector in terms of its sort of progress in that area. But again, if we look at the profit, we can see that LGFA is forecasting for 24, 25 and 26 financial years to achieve around sort of $10 million of profit. But again, I'd just like to highlight that LGFA is not a profit maximising business, and therefore we've put a lot of resource into areas like sustainability, which comes at a cost to LGFA. So when we make a sustainable loan or a climate action loan to councils, that reduces the margin that LGFA earn on that loan. So, but LGFA is happy to do that because it is progressing sustainability across the sector. So I'll finish there and pass back to Mark, and he'll just touch on the area of sustainability.
Thanks, Andrew. So look, the next 3 slides just really talks about what we're doing around sustainability. As Andrew said, look, our role in the sustainability sector is more around influencing councils and actually being an enabler for councils around sustainability. We only have 9 staff. We have a total carbon footprint of 50 tonnes per annum. But the council sector carbon footprint somewhere between 1 and 2 million tonnes per annum. So if we can do a lot of stuff to assist the sector in terms of reducing their footprint, then that's a really strong outcome for both LGFA and also for the sector. And so how we're doing that, we have the Sustainability Committee. We have Nick Howell, who's a full-time sustainability advocate with us. And then, as Andrew touched on before, we have 2 types of sustainable lending products where we're encouraging our councils to actually, take on projects that will ultimately, in the long term, reduce the carbon footprint of the sector. So we have our green social sustainable loans. We have, at the moment, a small number of councils who have actually taken on board GSS loans. There's 5 of them. Most of the projects to date have been green buildings, and you sort of see that also most have actually been within the Greater Wellington region as well too. If a council has GSS eligible projects, then we provide a 5 basis point discount borrowing margin to the council. And I understand, I think Kāpiti is looking at some of its projects potentially going forward to see if they can actually become eligible for this project. And then the big one, I think we talked to councillors in the past about this, and it's really pleasing to actually see that these are our climate action loans, and Kāpiti is the most recent council to actually sign up to our climate action loan lending. So here, basically, you're getting now going forward a 2 basis point discount on your borrowing from LGFA. That's provided you have a GHG emission reduction plan in place and you're actually meeting those targets as well too. So we're really pleased that the council has actually signed up to this. We have another 4, I think it is, councils actually in the pipeline as well too. So This is probably going to be the largest part of our sustainability lending going forward. Not all councils have a lot of eligible projects for the green social sustainable lending product, but there's no reason why all councils can't actually sign up to the climate action loan product. So that's going to be really pleasing to see, or for us to be able to report on our progress as we sign up more councils. So that's the end of the presentation. So very happy to have some questions.
Awesome. Kia ora, Andrew and Mark, for the presentation, and also for your commitment to sustainability and climate action. I feel like each time we hear from you, there's kind of another layer of specifically consideration in that regard, which I really appreciate. So open it up for questions. If anyone at the table has any. Councillor Wilson.
Yep. Thanks for that, guys. I'm not very good with numbers, so what was the OPEX for last year?
Yes, I think it was probably about $9 million. Sorry, I don't know. I'll try and bring back up the.
It's on the slide, Mark. One of the.
Yeah, just give me a minute. I jumped off screen sharing too early. Just please. Just go back into. Sorry, gone too far. Number 11, I think it was. There we go. So we have two parts of our OPEX, or three parts. So the approved issuer levy. So you see here for June 24, just looking at the forecast, 300,000. So we pay tax on behalf of offshore investors who hold our bonds. It's something that what the New Zealand government does as well too with its government bond holdings. We then have issuance non-lending costs. So they are the likes of our credit rating agency fees, our legal fees. All our bonds are listed on the New Zealand Stock Exchange, the NZX. And so they're available for retail investors. So they are the costs there. They would be costs that I suppose the council would be incurring if they were actually issuing their own bonds or borrowing in their own name. And then finally, the operating overhead is things like rent, governance fees, employee remuneration, IT costs as well too. You got to remember that we have almost a $20 billion balance sheet now, and what we do, we are a large outsourcer. So we use the cloud for our IT systems, for treasury systems, etc. We outsource our legal fees as well too. So that's what comes through in the operating overhead as well too.
Okay, and that presumably includes the close to $1 million salary for the chief executive.
Yes, it does.
Yeah. Okay, that's cool. Thanks.
So can I just add, for the year to June 23, the SOI was for operating expenses to be less than 9.4, and they came in at 9.1. So we did achieve that objective.
Kia ora, thank you, Mayor Holborough.
Thank you very much for the work that you do. It's and talk of the comments around focusing on environmental sustainability as well as financial sustainability. I've just got a few questions. The first is around that unmet net operating profit figure. When that graph comes up, it's remained stable at a significantly higher level back. The last time you see it at around this level is in 2013. So the projections are that it will jump back up again next year. I'm just curious as to how that would happen if there is this general shift in the kind of policy around long-term borrowing.
Yeah. Okay. So part of it was the shift in interest rates from basically very, very low, almost zero, up to where we are now, which is like 5.5% interest rates. So what we can actually do is to then sort of adjust to it. It's very hard to adjust as interest rates are actually moving. So that's the major contributor to it. The balance sheet's also growing as well too at this point in time. So that's also, I suppose, part of the contributor to it as well too. But so no, look, we're on track already after the first 2 months to meet the SOI forecasts again.
Oh, that's brilliant to hear. Thank you. The other thing is when I see a significant change from one year to another in the tables, I just feel a bit curious. So on page 62 of your report, item 14, payables and provisions, 2022 the figure's 44, and then it's down to 5 for 2023. That's in the loans purchases to be advanced. Just wondering if you could explain that shift to me.
Sorry, I'm just trying to get through to that page of the report. Sorry, it's page 62, was it?
Nitpicky, but I'm just curious.
Sorry, I'm just trying to get to page 62 now. So I've gone to 78. Sorry, gone past it. 66, 64. Sorry, 62 of the report. Sorry, which part of the financial
Number
accounts?
14, the second table down, payables and provisions.
So table 14, payables and provisions, loans. So that's loans purchases to be advanced.
Yeah.
Okay, so what happens there is that some councils basically borrow on a forward settlement date. And so what they were, they would have been loans that we had done on the June side of the balance date, which would have obviously been settling, I'm assuming, after the balance date, so maybe in mid-July.
So just a timing issue.
Yes, timing issue.
Great, thank you. And the third question I wanted to ask was, I noticed there was it's quite a significant legal expense as regards water reforms. I was wondering, was that around in last time we talked about investigating whether LGFA would be involved in financing the new water entities? Has there been any progress in those conversations in terms of LGFA retaining the kind of benefits of scale that it enjoys at the moment?
Yeah, so look, we're involved in the affordable waters reform from the point of view of, and our objectives are to assist central government and to assist the sector in terms of matters of importance. And so, yes, we have been incurring some costs in terms of playing involvement, but we feel that's part of our underlying objectives. Where we've got to on the financing of the water entities, we said a while ago now that we wouldn't make a final decision. We would have to consult with our councils on it. We have felt that we haven't got to that stage yet. We feel that for LGFA to lend to the water services entities, then we do require the full support of our councils, and we felt that we wouldn't actually get that support from councils to actually lend to the WSEs. So that's why we haven't actually come to councils for that sign off, for that support. We've also took the view, I think, that we'll wait until after the election as well too, because obviously the opposition parties have a different or possibly different model to actually consider. We still haven't seen the details of that, so it's better to wait, I think, for another couple of months to see how the election result goes, but also then what their proposal actually is, because we haven't seen the full details yet of that. The other piece, I think, is the last piece of legislation, the amendment to the earlier legislation went through in August, and that did have the provision for the establishment of a LGFA, but for the water services entities, for the 10 of them, so a collective funding vehicle similar to LGFA. We are certainly helping central government. We did make a presentation to the select committee on the idea of that of an agency, and so we've been working with Treasury and to a lesser extent with DIA as the sort of testing the case, I suppose, for that. So again, no decision's been made on that by central government. It's an option for them. I think to have a look at a collective funding vehicle, and as I said at the very start, we're here to help central government and local government. So we'll certainly continue to support them as they kind of look to that as an alternative. But again, before any decisions made, we would obviously be coming to our shareholders and our council borrowers.
Thank you very much. It's really good to hear that that background work is going on and that you're assisting in the way that you are. So thank you very much.
Yeah, agreed. That was a really useful question to have asked. All of those were in that answer. It was very interesting. Community Board Member Simon Black.
Thank you, Madam Chair. Kia ora tātou. Hey, look, thank you very much for the presentation. Looks like everything's in good hands. Just a couple of questions, and one's probably just my ignorance. I thought that Auckland was pulling out of LGFA. Is Oh, that's cool. That's cool. Thank
Local
you.
Government New Zealand.
Got one. So many acronyms. And then the other question is there any criteria to who we offer bonds to? Let's say oil companies. Are we discriminant on regarding the sustainability of who invests in us?
Okay, so look, we issue bonds to retail investors, to institutional investors in New Zealand, to the banks, and we also issue bonds to offshore investors. All our bonds are done as a public offer of securities, and so as a result, anyone can actually invest in our bonds. We don't have a right of refusal, so we cannot actually stop an investor holding our bonds because they're a public security. So same as if it was a share, Fletcher Building can't stop an investor from investing in their securities. The only way we could stop it would be if we had some concerns over breaches of anti-money laundering and counter-terrorism financial, whatever the act is, AML, CFTA. We could then highlight some concerns with the regulators, but that's to the extent of what we can actually do, because our securities are public tradable securities. To our knowledge, there are no oil companies or tobacco companies who actually hold our bonds.
Great, thank you very much.
Thanks, Simon. Councillor Pravanov.
Thank you through the chair. Thank you very much for coming along today to be available to answer questions from us. So my first question relates to something that's mentioned in our report, and it talks about performance targets. And I'm just wondering, who actually sets these performance targets?
Okay, so the performance targets are set as part of the SOI process. So it's set with the board, and the Shareholders Council has input into it. And then they go out under the draft SOI process for feedback from our shareholders. So we have 31 shareholders, central government, and then 30 council shareholders.
Thank you very much for that. So my second question relates to, so I know that I suppose most of your focus is on financial services, but obviously you have a strategic priority in relation to the environment and social responsibility. I note that you have a carbon reduction management plan which has various targets, and I'm just wondering, I suppose, what those targets are. I'm looking on your website, and it says our first target is cutting per employee emissions by 30% by 2030. I'm just wondering, I assume that is correct, and what other types of targets you actually do have, please?
Yeah, so that's our direct target, and you'll remember, as I said, our carbon footprint is very small. And most of our carbon emission, I think 80% or 85% of our carbon emission is actually travel. So we are looking very closely at how we travel. We certainly travel a lot smarter now. So that's our key. That's our key target from that point of view. We can't really reduce paper. It doesn't actually have a major impact as well too. We can't do a lot around electricity sort of consumption as well too. So we are effectively a financial institution who borrows money and then lends it through. So we don't have a large carbon footprint. So I think, as I sort of said, our objectives around actually trying to encourage councils to embrace greater sustainability measures. So some of our staff KPIs for this year is about increasing the number of councils who take up climate action loans, doing more GSS projects. So we will never be able to get our carbon footprint to zero because we are going to have to travel. We've got 77 councils who borrow from us, so we have to obviously meet with them and be in contact with them. We have around about 36% of our borrowing comes from offshore investors. So again, we have to meet with them. So we are reducing our carbon footprint, our travel, but it does become a level where we can go no lower. So hence how we influence the sector is more important to us than trying to get our carbon to zero. We do offset, so therefore we do buy New Zealand sourced offsets, carbon offsets at the end of the journey as well too.
Kia ora,
Thank you very much.
Awesome, thank you. All right, so we've just got Councillor Coe and Councillor Wilson, and if you could both be quite brief in your questions, that'd be awesome. Councillor Coe.
I'll do. Thank you. Look, I just want to take things to a more strategic level. What are the key strategic challenges you face over the next 3 to 5 years?
Well, primarily it's navigating affordable waters, deciding upon whether or not we're actually involved as a lender. And then also secondly, what happens with the proceeds if we're not involved? How do they get channeled back from the water entities through the councils back to us as well too? So they're the key. Second one obviously is just the general volatility in financial markets. And I think navigating that as well too. What we've found over the last 10 years is that markets have been very volatile. We've certainly gone from low interest rates to relatively high interest rates over the last 10 years now. So they're the key sort of thing.
Thank you.
And Councillor Wilson.
Okay, and just basically a follow-on from that, given the funding structure of water services in the UK and the debacle that's turned into, is LGFA a preferred funder for the water entities?
No, so the options still are these water entities borrowing from investors, from the public, borrowing from central government, borrowing from LGFA, or potentially now borrowing from a collective funding vehicle as well too. I don't think there is any preference. I think probably speaking on behalf of central government, their view would be that their preferred option is for the WSEs to actually be borrowing their own name, similar to what the energy companies do now. I think probably central government's least preferred option would be borrowing from central government. We'd be somewhere in the middle, but as I said, we need support from our council members before we would go down that road.
Okay, and the other one, so just quickly, what would the LGFA's capacity be for funding these entities? So for the amount that they will require, how much? What is there a percentage of that LGFA would be comfortable in funding? Should it be in a position to do so?
So yeah, it's a good question. So they would eventually be probably, I don't know, Andrew, probably at least half, if not more, of the lending book. But it depends upon if they actually borrowed fully through LGFA. Auckland Council only borrows about 30% of its borrowing through our GFA. So I would imagine that if these WSCs are established and get off and start borrowing, even if we allowed them to borrow through our GFA, they would not fully borrow through our GFA. So I think that's a really important point. They do need their own independent sources of borrowing outside of our GFA, given the potential scope. So we think that we do have capacity, because obviously at the same time you'd see council borrowing be less as well too. So there'll be a substitution if they were to borrow through us from council borrowing to WSC borrowing. We think that we have got the capacity. We've just started to diversify our funding sources, and we did borrow some money in Australian dollars a month ago as well too. Just as Andrew pointed out, with the large amount of council borrowing that's occurred, we've just started to diversify away from solely borrowing in New Zealand.
Great, thanks.
Thanks, Councillor Wilson. Thanks, Mark, and thanks, Andrew, for being with us. We'll now look for someone to move. There's just one recommendation, is that we note the contents of our GFA's Statement of Intent and Annual Report. So is there someone who'd like to move? Councillor Wilson, seconded Councillor Warwick. Right of introduction. Any debate? Just a reminder that we do want to get this meeting done in the next kind of hour or so. So great. There doesn't seem to be any debate, and I think that's due to the time that we spent kind of asking questions to you both, and also the report that has been produced. So please thank the rest of the team on our behalf as well. So that's moved by Councillor Wilson, seconded Councillor Warwick. All those in favour? Aye. Against? That is carried. Thanks, Jing, and thank you, Mark and Andrew.
Thank you.
All right, so we'll move straight along to item 8.2 on page 73, Vision, Kāpiti and Design of the Outcomes Framework. Welcome Angela Bell to the table. Yep, sounds good. We have, as a reminder, we've workshopped the contents of this today as well through an interactive kind of format. And so, yeah, if we can just take questions specifically relevant to the contents of the report, that would be great. Kia ora team, just bringing your attention back to the team at the front. Thank you.
Kia ora. I, in addition to the report you have, just wanted to make a couple of comments this morning. One is that we do provide a bit of an update about our engagement through the Engagement Hub in Waikanae. And just as a bit of an update to you, I was mentioning to a councillor this morning, we've had close to 300 items of feedback in our first month, and that's without having come together for additional feedback that might have come in. That's actually significant feedback through that mechanism. And so obviously we've had to have your say, our hub, people are coming to us. And we have not gone into full advertising mode around this yet. So we are moving to Ōtaki, and I wanted to let you know that I'll be touching base because we're looking to lock and load times in for you so that we can advertise that, because people are asking. So we've already had a couple of people from our Ōtaki community ask when councillors and community board members are going to be there, because I'd like to talk to you. So I will be following that up. So I just wanted to put that plug out there. And that's actually really successful for this kind of engagement. Secondly, obviously a strong focus today on the outcomes framework. The chair has noted that we have talked to you about this in some detail before. Today we are obviously wanting to endorse the fact that we're going to be bringing the results back to the table. So there isn't so much for you new information, but we want to make sure that we've tabled this approach so that publicly we're able to talk about our intention to be more transparent and open about the analysis we can undertake about the results that we have been reporting, but maybe not with this kind of analysis around it. So that is what this paper is today. So on the basis of that, we'd be looking to take questions. Thank you.
Great, thank you. And yeah, as I mentioned, just questions specifically relevant to the contents of the report. And as Chris has outlined, there are kind of three main, or kind of two main elements to that: the Vision Kāpiti kind of feedback and the project and process so far, that is Vision Kāpiti, and then that outcomes framework piece as well. Not seeing any questions. Oh, yep, Councillor Pravanov.
Right, thank you. I was going to wait, but I'll go first. So in relation, so this actually sort of is covered off on page 81 of the report and 82. One of the things that I remember bringing up when we were talking about this at the briefing, and this relates to the analysis of performance. So here it talks about inputs and outputs. One of the things too that I feel that is really important to include is actually the quality of the output and the timing. For example, if you think about a particular, say building a house, you can build a house, but the quality, there's no conversation about the quality of it or the fact that it might be have been completed 5 years late.
No, I remember we had this conversation at the workshop table we were at, so I wonder if...
I can so maybe what I can assure you and also the public who may be listening in is we will have metrics that we report regularly. So some of them will be focused on the quantity of things we do, some of them will be the quality of the things that we do. That is going to come to this table for you to talk about and agree, and that is part of our LTP process. What we're talking to you about today is the analysis that we're going to do on top of that. So this is something that we may not have had on the table previously. It's the idea that 2 new pieces of analysis that we're going to regularly report on, and we will talk about what regularly means, because it needs to be at the right time to tell you something, not just that you do it every week. But we want to talk about productivity, which is saying, essentially, how much is it taking us to do some of these things, and over time, is it more resource or less or the same? And the second side of that is, are we getting the results we want from it? So everything we're doing is for a benefit for the community. So we'd like to have a standard way of actually reporting that back. So it feels like that's a gap in the information that we're presenting back to the community. So we're not really telling that story as well as we could. And we want to do it on a basis that's evidence-based and structured and standard, and that we can compare ourselves to others actually. So that's what we're talking about today. So we will be coming back to you with the quality and the quantity measures. That's not what we're asking for today though.
Okay, thank you.
Great, I'm not seeing any other questions. Yeah, Mayor Holbrook, and then we'll look for a mover.
So I'd like to move, because I'd just like to tidy up the wording just slightly. I don't think we need it up on the screen or
Okay,
anything.
so what would you like to...
So it's just
to
that
amend
once the
slightly?
recommendations are moved by us, they become our recommendations. So the word "you" kind of doesn't make sense. So rather than "you," just updating the committee, and then in C, rather than "we," just staff. Staff will bring the proposed outcomes framework.
Yes.
So it's just minor changes, just to tidy it up.
Yeah, perfect. Is there someone who would like to second the 3 recommendations with that slight change? Councillor Pravanov, I think I saw you raise your hand. Yep, cool. That was kind of your right of introduction. Is there anything else you wanted to say, Mayor Holbrook?
No, I don't think so. Just congratulations on the outcome of the hub engagement. Really good, and hope it goes well in Otaki as well.
Awesome. Total call that. Councillor Halliday. Sorry, Janet, would you be able to press your mic off? Thank you.
Thank you, Madam Chair. Endorsing Mayor Halborough's comments there as well. I just want to say this is a nice tight report. Thank you very much. And I'm finding it quite useful with regards to just reinforcing the stuff that we've been through in workshops and that sort of stuff. Nice to reread it in a nice, concise way and just, okay, and that sort of thing. There's also just saying I really, really appreciate it. I appreciate that, and the fact that coming through the workshop process, this is quite quick to sign off, so to speak.
Yep. Agree with that 100%. Awesome. Doesn't seem to be any further contributions to debate, so that's moved and seconded. All those in favour? Aye. Against? That's carried. Thank you, Angela. Thanks, Chris. All right, we'll take a 5-minute break and be back at 10:30, just so you can grab a cup of tea, stretch your legs, and then we'll jump back into the climate change and resilience strategy and the think tank conversation. So Doug will be with you shortly.